Good morning, guys. Okay, so first trade of the week from Monday the 23rd of March. I'm going to do a couple of different things in this video because there are a couple of things that I think it's worthwhile going over. So first thing I'm going to do is talk through the general kind of analysis for this trade because I thought it did have a lot of kind of things going for it that may be beneficial if you are just kind of learning how to read charts or if you want to get a bit better at technical analysis. And then what I'm going to do is move into talking about a couple of things which are, or which I think are quite important right now if you are trading. So what I'm going to do is I'm going to pop a little timer thing above my head, which will tell you when the analysis is, in case you want to skip past that part of the video. Coming into this week and today, I had been looking at the potential for bullish coming into these markets. I'd really been looking at it last week also. So last week we started hitting down into fairly key levels. And what you probably noticed is the market kept buying up over and over and over again. What I was saying to subscribers was we're down at very key levels now. I'm more than happy to buy. There's very little resistance above, and it's likely if we do start breaking up, we're going to see stronger bullish coming into these markets. Now, coming into the start of this week, what happened was the markets gapped down, and it gapped down underneath all of those previous lows that we'd made from the week before. Now, what do you think's happening when that's going on? So if you think about it in terms of the kind of the masses, huge downtrend has been happening. The market then gaps down. I'm not sure if the US markets actually went limit down again, but they gapped down, and everyone's kind of looking at that and they're thinking to themselves, the panic's back, absolutely fantastic. I can start selling into this market. Here we go again. What I went over with subscribers was there's a really good chance that we'd actually gap down below all of those previous lows from last week on the daily time frame. And we had, or the market had gone basically stop hunting. So looking for stops underneath those levels and also looking for those breakout traders who are again looking to start selling this market. So when we started to hold down there, it was giving me the clue that this market is now potentially confirming that we're turning bullish. And then with this particular setup, what you can see is we created some nice bottoms on the 5-minute time frame. Also, we came down, we tested it. And pretty much this was just one of those trades where I'm in the trade and that's it. It's lining up with my analysis. It's lining up with what I was expecting. It's a loss or it's a win. I'm not doing any trade management until it hits into my target area. Now, the trade did end up as a fairly decent trade, around about £400 in profits. But the real bounce came yesterday, so Tuesday the 24th, because when you're reading a market, you're kind of always looking for the main areas where the buyers and the sellers are fighting it out, so the support and resistance. And then it's if we start breaking those areas that it's giving you the evidence that, yeah, okay, so now the bulls are looking like they're back in control. And so yesterday we had a level on the DAX, a level on the FTSE, where we broke above those, and then we got some really, really good rallies. And there was actually a couple of pretty fantastic setups. One on DAX and one on FTSE. So hopefully some of the subscribers at least caught that, and hopefully some of you guys out there who are just trading the markets also were able to get it, because we got some fantastic moves, and those are really the kind of what I call the account builders, right? They're the ones that come along a couple of times a month, 2-3 times a month. They're really high probability and you get really, really good risk to reward. Now, that kind of takes me on to the second part of this video. During the past 2-3 weeks, the markets have been going insane. When this happens, most people kind of flood to the markets, a huge portion of people, because they think, oh, increased volatility, lots of money to be made. They see people posting about, I just had a 10-to-1 risk to reward and all this shit. And then what happens is people also tend to take on a little bit too much risk at times like this. I find I can't even explain to you how many emails over the past 3 weeks of people telling me that they've blown accounts. It's really important when you're trading, if you're serious about doing this, if you're just coming in with, a few £100, maybe more than that, and you're just thinking to yourself, I'm just going to do it, see what happens, if I win, I win, if I lose, whatever, fine. If you're coming in to do this seriously, long term, first and foremost, always, the consideration should be, how do I protect my account? Always, because without your account, you can't trade. And if you're taking on big risk, it's very easy to destroy your account to a level that then spirals you out of control and you do even more damage. So it doesn't matter what the market is doing when I'm trading, how volatile it is. I am always adjusting myself to keep my risk as small as possible. I'm always being cautious. And to be honest, I would say I'm overcautious, right? Clearly, I miss a ton of trades through being overcautious, but I do that because I know in the past when I didn't do that, the increase of losses, even if there was more wins, the increase of losses would cause me to make mistakes, which would wipe out the increase in wins anyway, and cause me to have more drawdowns. So it just doesn't work for me. So I have to be more cautious. But one of the things with these markets, and especially on the DAX recently, is your stop. You have to consider where your stop is going. It's always a consideration, but when the volatility is increasing to, we're like 4 times, 3 times what we normally have, you have to be thinking to yourself, does my stop still make sense on individual trades? If I'm seeing like 100-point candles, 150-point candles, do I just want to use what I've always been using, or do I want to think about this a little bit more? And what you'll see is on the trades that I'm running, so the first trade of the week, my stop is really far away. And the reason for that is because it's quite close at the open, first of all. But that's not really the reason. The main reason was it was a trade that I thought was high probability and I wanted to hold on to it no matter what. And what you'll see is it kept spiking up and coming back to break even and then into loss. And I wasn't willing to get my stop to break even because it was a runner. But I knew that if I just had a very tight stop, it was likely that I would get stopped out and then the trade would still work. So it's really something that you should consider when you are getting into trades, depending on what market you're trading. It'll even be more the case if you're trading something like crypto, I'd imagine, because the volatility on those markets is always high. So you have to be considering each individual trade and if the stop makes sense. So those are my kind of things that I've taken out of the past few weeks. Lots of people are risking very high and getting slammed. Unfortunately, it's a very common occurrence. That's the one thing I would say is always protect your account first and foremost. It's the most important thing for you as a trader. It doesn't matter what else happens. If you've still got your trading account, you can still recover and you can still trade again. If you blow that, you're screwed, right? That's your ability to earn gone. The second thing is consideration of stops. So yeah, good start to the week. Yesterday was, to be honest, a better day, but yeah, volatility is still insane. I hope you guys are all enjoying your trading month. It's certainly a different trading month from normal. I'm James Orr, and thank you.